Hey guys, Jay Graff coming at you again with another Robinhood and M1 Finance portfolio update. Before we jump into my portfolios, I want to share with you all a Young Jeezy quote. He said, "I grind like there's 10 of me. I swear there's just one of me. I know I ain't there yet, just know that I'm gonna be." I think this is a great motivational quote. You might not be where you want to get right now, but you just got to keep working and you will get there. So let's get it. Alright guys, so here we are in my Robinhood portfolio. So I'm going to start off by showing you all how my portfolio did over this past week, and then we're going to move into talking about my best and worst performing stocks since I started this portfolio. So in this past trading day, I was down 0.7%. So there was a big drop in a lot of US stocks when the news came out that there was another case of the coronavirus in America. I don't totally understand why this news would cause such a drastic drop in the stock market, but it was certainly kind of interesting. So that's why my portfolio was down 0.7% on this last trading day. Over the past week, I finished down 0.6%. For the past month, I'm still up 2.5%. Past 3 months, I'm up 9.6%. Over the past year, still doing great, up 22.5%. And all time, I'm up 23.7%. So some of my best performing stocks in my Robinhood portfolio have been Visa, Omega Healthcare Investors, and Waste Management. So we'll talk a little bit about Visa. So I actually bought my first share of Visa at around $70 or $80, I believe. It's actually about $90. I've got it for $88.62. And the price has more than doubled since I bought it. That was actually one of the very first stocks I bought in my Robinhood portfolio. Pretty cool to see how well it has done so far. But my total return for that has been over $250. I'm up over 70% on it. Very, very happy with how this has gone. Couldn't ask for anything better than that. So Omega Healthcare Investors is kind of an interesting one. So I bought shares of it about a year ago, maybe a year and a half ago, because I thought it was yielding a pretty nice dividend. It was at around 8 or 9%, which usually kind of scares me off because usually companies with that high of a dividend, their earnings aren't too great, or there's some sort of bad news where their earnings in the future are expected to go down. But I saw it, I couldn't find anything wrong with it, so I went ahead and picked up some shares. I'm up 47% on it, and that's not even including the dividends that I've received from it. So all in all, I'm up probably close to almost 60% once you add those dividends in there. So Omega Healthcare Investors, they invest in medical healthcare properties, and I think one of the reasons they've done so well is just because pretty much every real estate investment trust has done very, very well over the past year because there was a new tax law that really benefits investors in these real estate investment trusts. So a lot of real estate investment trusts have performed similarly. A lot of them are up, 15, 20%. I happen to get lucky with Omega Healthcare, where it is up 47%. So one of the other stocks that has done really well for me is Waste Management. So I've talked about Waste Management a ton on this channel. I love it because there's always going to be a need for people's garbage to get picked up, and that's what Waste Management does. So I'm up about 26.5% all time. That's about $200. I bought my shares around the $80 range, picked up a few as it continued to go up, got some more at around $90, $100, and then I stopped buying it at around $105. I've also got some nice dividend payments from it as well, so I've just been very happy with how Waste Management has done. So now that we've talked about my best stocks, we'll talk about my worst performing stocks. So one of my worst performing stocks is Square. And you'll see here, it only looks like I've lost 5.3%, but I actually had 3 shares of Square. I bought them all at $75, and I actually sold two of them for a loss at $60 or $65 because it was just going down and down and down, and I wanted to cut my losses. But I still kept a share so I could kind of keep up with it. Not too happy with how this has been. If you all look at the chart, it's kind of crazy. It was pretty much exponential there for a while. It peaked at around almost $100, and then it dipped way back down. I tried to pick up some shares as it was on its way down, and that just didn't work. It kept going down, so eventually I sold off a couple of them. So I probably ended up losing probably about $40 on this. 30 of those dollars are realized losses, and then I have $4 of unrealized losses, as you all can see here. Another stock that hasn't done too well for me is Geo. They are a company that owns private prisons. One of their main reasons I bought them is because they had a very nice dividend yield. So kind of the same reason that I bought Omega Healthcare Investors. Now, I should have done a little more research on Geo because there is a reason that they had such a low such a high dividend yield, and that is because there is the possibility that private prisons are outlawed in future years. There's a big news article that came out about it was some private prison group, and they were I think bribing judges to send more people to jail so they could make more money. It was pretty messed up. I'll try to find the article and link it below. But after that came out, Geo stock went down. It does still pay me a pretty nice dividend, but as you all can see, I'm down over 28% on it. Luckily, I only have 2 shares, so not too big of a deal. Only lost around $13, and some of that's probably recouped from that dividend. But that's one stock that really hasn't done too great for me, and I really should have done some more research on. The next worst performer in my portfolio is actually not doing that bad, and it is a treasury bond ETF. So I bought this back in August as kind of a defensive play. I wanted to park some money into something pretty safe where I knew if there was a recession I wasn't going to lose a lot of it. So I went ahead and picked this up, and I'm only down $8 all time. It does pay me 50 cents every month, which is kind of cool. I have 2 shares. Each share pays me 25 cents a month. So it's kind of cool seeing that recurring income come in, but overall this hasn't done too great. Something I'd like to note is that if you want to invest in bonds, instead of going with a bond ETF, sometimes it's better just to go ahead and buy the bonds, because as you can see, this bond ETF, it fluctuates up and down in value. So based on the news that we have about the economy, it could go up or down. So a lot of people, when they invest in bonds, they want something that's going to hold its value and return a little bit of interest. And if that's your goal, then I would certainly buy physical bonds. I think you can buy them on the U.S. government website. But that's one risk you run when you buy a ETF that holds bonds, is it will go up and down in value potentially. So with that, we're going to go ahead and jump into my M1 Finance portfolio. I'll show you how that has done, and we will go over the best and worst performers in there. So here we are in my M1 Finance portfolio. In this past trading day, I was down 0.6%. Over the past week, I was down 0.66%. Over the past month, I was up 1.5%. For this past quarter, I am up 5.4%. And all time, since I started this portfolio in July, I am up 11.8%. We'll check my dividend history as well. So the last M1 Finance video I uploaded, I got 17 dividend payments in one day, which was very neat. But since then, I haven't received a whole lot of dividends. I have invested about $40 or $50 since then, just trying to keep this portfolio growing, keep those dividend payments growing. I did get a dividend from Medtronic and Roper Technologies, as well as Cisco Corporation. So now we will go and we will look at the best and worst performers all time for this portfolio. So we have it sorted in terms of return from highest to lowest. So my best 3 performers have been Apple, Intel, and Leggett and Platt. So I've talked about Apple a lot on this channel. I sold 3 shares in my Robinhood portfolio when it was trading at around $300, I believe. I just thought that Apple had hit a point where I thought it was overvalued. I saw a news article that it was worth more than the entire German stock market combined. That kind of scared me. I thought it was just way too big, getting way too overvalued, so I sold my shares in Robinhood. It did end up going up a little bit more after that, but I can't be too upset about it because I end up realizing about a 60% return on my shares of Apple stock, so very happy with that. Intel has actually done very well, another technology company that has done very well. And then Leggett and Platt has returned 37.33% for me. So something interesting is Target actually used to be one of my best performers. And I'm not sure if the stock price has gone down lately or what, but I was at one point up over like 50% on it. I think because I bought more and more shares, that return is going to be reduced. It's not going to be 50 or 60%. It's going to be lower. But I'm kind of surprised that Target was not in my top 3 because it was on a tear for a while. It was just going up and up and up. So now that we've gone over the best performers in this portfolio, we will go over the worst performers. So I have Interplus Corporation that is down 29% for me. Franklin Resources is down 19% for me, and Anheuser-Busch is down 18.2%. So something interesting that M1 Finance does that you all may or may not know about is it balances your portfolio to try to make every stock or ETF in your portfolio represent the weight that you set at the beginning. So for example, I decided to pick 100 different stocks and set all their weights at 1%. Now, if one of these stocks was to do really well, the next time I invested money, M1 Finance would buy less of that stock and buy more of the stocks that had not performed as well. I think it's a pretty cool feature. It's a good way to dollar cost average, and it's kind of a good way to double down on the stocks that you think should be doing well and aren't doing well. And it's also a way to avoid investing too much in stocks that are just becoming overvalued. That's my personal opinion. Some people would say that it's a bad thing because they like to invest in stocks as they're going up and up and up, and they'd say, you know, that's one of the traits of a good company is their stock price will continue to rise over time. And I agree with that for the most part, but I think right now where the stock market is, Standard & Poor's 500 having a price to earnings ratio of around 24, I just think there are a lot of stocks overvalued, and now is a good time to hunt for value. And I think the way M1 Finance is set up, it will cause me to invest more in what would be considered value stocks. So I like that M1 Finance does that. There are ways you can turn off that feature and pretty much just invest a set amount in whatever stock that you want to. But I'm going to continue to use it for now. I'm very happy with how this portfolio is doing. My goal when I started it was to just keep adding money on a weekly or bi-weekly basis, try to grow these dividend payments, and they have grown over time. I'll show you how this portfolio has been doing. So if you look at the earned dividends, all time I've received $12.30, which is not a ton, but then if you look, I've actually received $3.16 of that in the past month. So the bulk of my dividends are coming in recently, and that's because I've just been adding more and more money, reinvesting the dividends that I do get. But I think if I just keep at it, like Young Jeezy said, keep grinding and keep adding money to this portfolio, these dividends will get to a point where I can actually use them to pay bills. With that, I want to thank you all for watching today. Please hit that like button down below. Please subscribe to my channel. Please hit the bell so you can be notified whenever I post future videos. And JGraph out.